What is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis and we have a wonderful Sacramento real estate market update for you here today. We're going to be taking a look at Sacramento, Placer, and El Dorado County. We're going to look at all of the stats and facts in this market so you know exactly what is going on. So if you are a home buyer or if you are a potential home seller or you're an investor in this market, this is information that you need to know and you need to be aware of so that you can make the best decision for yourself. On top of talking about what's going on in the residential housing market, we're also going to look at what happened to mortgage rates. So I'll give you a quick update on that here as well. Now, if you're new to the channel, you like all things finance, real estate, and investing, please hit that like button, hit that subscribe button, and without further ado, let's jump right to the data. All right, so here we go. We have a chart here up on the screen that shows the number of homes for sale, sold, and pended. Again, this is single-family residences located within Sacramento, El Dorado, and Placer County. So it's a good sample size. It gives us a really good idea of what's going on here in the Sac Metro area. Now, if we take a look at the light green bar here, this is the number of homes listed for sale. So that's your actual housing inventory. For the month of July, we hit about nearly 3,800 units. It came in at 3,761. That is up about 13.6% from the year prior, and it's up 77.2% year over year. So we are seeing a trend of increased inventory, which we chatted about briefly on last month's market update there as well. Now, from the beginning of the year, you go back to January, take a look at where it was. Housing inventory in January of this year, so about 7 months earlier, was only at about 1,100 units. So we nearly have 4 times the amount of inventory than we did just kind of at the bottom here in the last 12 months. Now, one thing that I think is really interesting here is that generally, as you go into the late spring and early summer, we tend to see an increase in the amount of transactions that are taking place. Well, that's not the case this year, so we're seeing a really interesting trend start to unfold. For July, we had 1,443 closed sales. Month over month, that's actually down 28%. That's a pretty large reduction. Now, year over year, that's actually down about 40%. So we're definitely seeing a reduction in the actual transactions that are taking place in the market, while we're seeing an increased amount of inventory. Now, the same goes for pended homes here, or properties that are put under contract. This red line is an indication of what's put under contract for that specific month. Now, one thing that I want to point out is that whatever gets put under contract, let's say in May, generally will close in either June or July. So there's generally a 1 to 2 month lag. Well, as of July, we only had about 1,600 units put under contract, which means that we're likely going to see less closed sales in the month of August and possibly even in the month of September, specifically if this trend continues. So something we're definitely going to have to keep an eye on. All right, the next chart is the average price per square foot. I've told you this before. It still remains probably one of my favorite metrics to track because you can really determine if you're getting a good value in the marketplace. And what I mean by that is, let's say the average price per square foot is $343 per square foot for the specific area that you are looking to purchase in. If you can buy a property at $300 a square foot, you know you have some sort of built-in value. Of course, every situation is different. It's just a general metric that I like to pay close attention to. So for the month of July, price per square foot on average went down to about $343. That's down approximately 2.6% from the prior month, and it's still up 5.9% year over year. So we're still higher than we were a year ago. Prices have not came down. Year over year, we have still seen an increase, but you can see that in the month of April, price per square foot reached a peak and then it started to level off, and we're starting to see reductions. Now, this is not a dramatic reduction. It's nothing, in my opinion, to panic about. In fact, we see ebbs and flows in the price per square foot annually. Generally, as you go into the summer months, we see peaks, and then as you go into the winter months, it starts to come down a little bit. So we'll have to see how this unfolds, see if it's kind of a normal market fluctuation. But if you go back over the last 12 months, you're probably plus or minus, 5 to 8%, which I think is probably a fairly standard, movement there in the market. Average days on market for July kicked up to about 3 weeks. This is still a very short period of time being on the market. If you go back to January of this year, we saw homes sitting on the market for about 25 days. So we're still not sitting on the market very long. If you have a properly priced home, it's going to move very quickly. So it's still an indication that there is strong buyer demand out there. But again, it's for a properly priced home. I am starting to see homes sit much longer if they are priced incorrectly. So something that, is subjective to whatever the market data shows you. It's something you got to just pay close attention to. So this green line is the sales price compared to the original list price. Now, for the bulk of the last 12 months, homes were selling either at or above the list price. In fact, if you go back to May of 2021, homes on average were selling for 4% higher than the list price. And you can see this chart, how we kind of came into November, December, January, where homes were selling on average for the list price, just right at about 100% on average. And then February, March, April, homes started selling above the list price again. But they never dipped below that list price on an average. Well, if you look at the July numbers here, you can see that on average, homes are now selling for 98% of the original list price. What that means is that there is more wiggle room out there for buyers. Sellers are having to either reduce their price or they're having to consider offers that are less than what they listed the property for. All right, and the last chart that I want to show you before we get to our mortgage update is the month's worth of inventory. So this is really fascinating trend that seems to be continuing here, but the inventory levels have jumped up to about 2.6 months, meaning if you didn't put anything on the market starting today, it would take 2.5 months approximately to sell everything that was currently listed for sale. Well, if you look at this chart, you can see it's basically made a parabolic move up since the month of March. Now, anything under 3 months is still really considered a seller's market. So I don't think this is necessarily too alarming at this point. But if inventory levels continue, we're going to get to where we're more in a neutral or balanced market. If we start to see inventory levels tick up past maybe 5-6 months, then we're probably working our way into a buyer market, and we're going to see some softening. We're likely going to see some more price reductions and sellers having to make more concessions in order to move property. That may be a very welcomed thing for people that are out there shopping for a house. Over the last maybe month or two, buyers have finally gotten a bit of a reprieve that they have been looking for. They're able to negotiate a little bit more. They're able to be a little bit more selective. The downside is that higher mortgage rates are making these properties a little less affordable. So they have more product to choose from. They can be a little bit more, they have a little bit more negotiating power, but the homes are certainly less affordable today than they were, let's say, back in January of this year. Now let's talk about mortgage rates. So up on the screen, I have a survey here, mortgage market survey from Freddie Mac, which actually shows the average 30-year fixed, 15-year fixed, and a 5-year ARM. Couple things that I just want to point out. So about a month ago, we hit a peak in mortgage rates. And if you look at this chart, according to the national average, the 30-year fixed rate was sitting at about 5.81%. Now, rates have since come down. As of this last week, we are hovering at 5.3% on a 30-year fixed as a national average. Now, I have spoken with some mortgage brokers here locally, and we're actually starting to see rates in the upper 4% range. So from their peak, let's say at 5.8% or even in the low sixes from what I was hearing out there, we are now starting to see 30-year fixed rates under 5% with a 4 in front of it again. This is a really good thing for buyers that are out there that maybe were stretching a little too far when rates were hovering at about 6% and prices were still really high. So a couple things that we're seeing, which I think is going to be a really good thing for the potential home buyer in this market, is that you are starting to see prices obviously level out. We have seen an increase in price reductions. Homes are not crashing at this point. We haven't seen a dramatic reduction in the price of homes, But now we are starting to see a reprieve in interest rates, which means that home that you may have purchased with a 6% rate, well, now you can get it in the upper 4% range, maybe low 5% range. That's gonna make that product a lot more affordable. All right, well, that is gonna wrap it up for today's video. We covered all the information in the Sacramento real estate market. We looked at stats and facts. What are you seeing out there? Would love to hear from you. Are you buying in this market? Are you selling? Are you investing? Leave some comments below. Let me know what you think. As far as mortgage rates go, I'd be very curious to hear your thoughts on where you think they are going to go from here. Leave your comments below. If you haven't done so already, hit that like button, hit that subscribe button, and we will see you on the next video. Thanks so much.